Hi, everyone. Welcome to this week's market update. I'm here with Eric Anderson. Eric, markets have rallied again this week. What's fueling the optimism?
A few things. First, the economic data, while not great, wasn't as bad as feared. The latest ISM report showed new orders weakening, yes, but prices paid didn't jump unexpectedly. That alone was enough to calm inflation nerves for now. Second, earnings. Microsoft and Meta blew past expectations, and more importantly, their guidance was strong. That's important because markets aren't just reacting to numbers, they're responding to tone. Microsoft's Azure revenues up 30%, cloud growth over 20%, Meta solid too. Investors love it. But here's a sobering detail. Microsoft quietly raised prices on its Xbox Series S by $80. That's not just inflation, that's margin management. And that tells us that price pressures are real, just maybe delayed. So yes, optimism is back, but it's fragile.
Let's talk politics. Trump's reshuffling the deck. What's the read-through for markets?
We may be watching a quiet purge of the more extreme elements. This week, National Security Advisor Mike Walls exited stage left, headed for a diplomatic post at the UN. Now all eyes turn to Peter Navarro, Trump's longtime trade hawk. If Navarro is sidelined or replaced, markets will take that as a sign of softening on tariffs. It's all speculation for now, but it fits the broader narrative that the White House is recalibrating. There's pressure from industrialists, pressure from markets, and yes, probably polling pressure too. This is less about strategy and more about optics, and that matters to short-term sentiment.
We saw China make some noise about restarting trade talks. Is this for real or just another headline?
Honestly, it's probably a bit of both. China floated the idea of returning to the table, and markets jumped. The Hang Seng rallied hard. But let's be clear, this isn't a breakthrough. It's a signaling exercise. Both sides are bleeding economically, and both want to appear open to dialogue. Meanwhile, the US says 14 or 15 bilateral trade deals are progressing well. That's a strangely vague number for negotiations of this scale. Some of these deals may be real, others may be PR. Bottom line, markets are grasping for certainty, and even the hint of cooperation is enough to trigger a relief rally.
What about the macro backdrop? Any big surprises this week?
The biggest news was actually a lack of news. The Fed's key ISM manufacturing data was soft, but not disastrous. US GDP came in weak, down 0.3% quarter-on-quarter, mostly driven by companies pulling forward imports ahead of tariffs. So while the headline was ugly, the story behind it was less so. In Europe, data looks calmer. Inflation expectations are still well behaved. The ECB remains on track to cut rates in June, and that's giving European bonds a solid bid. Japan? The Bank of Japan halved its 2025 growth forecast to just 0.5%. Inflation targets pushed out to 2027. That's not exactly a ringing endorsement, but it does give the BOJ cover to remain dovish. Meanwhile, in the US, consumer confidence in the future just cratered. The Conference Board's expectations index fell below COVID-era levels. Consumers are still spending, but they're clearly scared. That dichotomy between present resilience and future fear is what's driving this whipsaw market.
Eric, we've talked a lot about volatility and shifting narratives. What are you watching most closely in global markets right now?
It's the divergence that stands out. India's markets have rebounded nearly 10% since early April, with the central bank signaling confidence in growth and room for rate cuts. In China, some managers are still finding value, especially in domestic-facing sectors with low valuations. Europe looks relatively steady. Inflation's contained, and the ECB may cut rates before the Fed. In contrast, the US rally feels concentrated, driven by just a few mega-cap names, while uncertainty around tariffs and policy still clouds the broader picture. It's a fragmented landscape, and how regions respond from here will tell us a lot about what's sustainable.
That's it for this week. Stay tuned for more insights next time.